The last time we looked at gold was on 27th of July over here around this circle, when we suggested that the intermediate cycle had finished around a week before that video. Since then we've seen more confirmations of a new daily cycle as well as intermediate cycle in gold. After that video, gold has already rallied by 4% and it's now at resistance from the 50-day moving average. We'll get back to that resistance soon, but for now let me welcome you to myfinanceteacher.org and let me switch to the US dollar. DXY index, the daily chart is in front of you, and there is a chance that the daily cycle on the DXY finished about a week ago over here around this question mark. The cycle length into that low is 64 days, which is close to the average duration of these daily cycles. There was also some support from the 50-day moving average, so we might see a bit of a short-term bounce into a new short-term daily cycle before dollar comes down a little bit, perhaps into the FOMC meeting. But can this bounce go on for a long while, pushing dollar much higher? Well, that actually depends on whether we've seen the intermediate cycle low at the end of May over here. Usually the intermediate cycle lows test or break the 50-day moving average and drop RSI by a lot. Both of these factors did actually happen down into that low, so there is some chance that we are in a new intermediate cycle in the US dollar since the end of May, meaning that dollar might actually continue higher for quite a while. But that intermediate cycle low would imply the previous cycle lasting for only 136 days. That's quite shorter than usual, so perhaps the intermediate cycle is still ongoing at 206 days today. This implies that the intermediate cycle is quite old and another drop below the 50-day moving average is likely sometime soon. Perhaps DXY rallies for a couple of weeks into a new daily cycle, then drops down into a FOMC meeting in late September. Especially if the expectations of a 50 basis point rate hike rather than the 75 basis point increase from the current 32.5% into a higher number above 40% chance. If by the end of September we see some more weakness in the economy, again, these expectations of a lower rate hike might increase, bringing the US dollar a little bit down. Now moving on to gold, the daily cycle is 18 days old today, which is still a young daily cycle, so higher prices are still likely even within the ongoing daily cycle. But as the dollar might rally, gold might be stuck under this 50-day moving average and under the intermediate cycle down trend line for maybe 1 or 2 weeks. Perhaps a bit of a retest of the middle of the Bollinger Bands before next push higher is likely. And later on, I still do expect gold to break above this 50-day moving average and possibly test the 200-day moving average near the top of this ongoing daily cycle, which should be followed by a bit of a correction down. Looking at gold optimism index over here on the left side of the chart, the optics also suggest that much higher gold prices are still likely. This is because the optics has only climbed from under 30 to just under 40. The traders, speculators are still very much frustrated. There is no elation in the precious metals yet. Hence, optics also agrees with our expectations of higher gold price. But of course, nobody knows the future, so tell me, what do you think about gold down in the comments below? Will we see gold test the 200-day moving average around 1840 by late September? Hit the like button if you think the answer is yes. And also remember to share this video with your friends. Tell your friends that there is much more information on precious metals, the general stock market, energy, including uranium and other commodities, as well as cryptocurrencies here at myfinanceteacher.org. Have a nice day. Bye-bye.